Oh, welcome into a daily editorial here on the KE Report and a daily editorial on Thanksgiving Thursday down in the U.S. I want to wish everybody a very happy Thanksgiving week and weekend, and I hope everybody gets some time to, first of all, watch some football today and also spend some time with family and friends. I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. And Jordan, I want to talk about what's been going on in GDX and GDXJ. First and foremost, this relief rally that's coming in GDX, and one could argue is being even a little bit more extended than you and I both maybe thought it would be, following up on a call that we had last week talking about that advanced decline line being still very much in the dumps. But again, this rally in GDX is carrying on, especially after the moves yesterday. What do you have to say, focusing on GDX and this rally?
Well, yes, Corey, this rally has definitely gone much farther than I've expected. I was only looking for a few days of a rally off the lows that we made, I believe, last Tuesday, as you mentioned. The market right now is pricing in softer expectations for the Fed next year. I believe they're thinking the Fed maybe is only going to hike once or twice next year, whereas the consensus prior was 3 times. So obviously, softer Fed policy is favorable for precious metals, and so the expectations for Fed hikes next year are being tempered, and even for the December hike as well, which coming into this week, it was 65% priced in, or you could say there was a 65%. The market was giving a 65% chance that the Fed is going to hike in December. After Wednesday, I have to think that's lower, probably 60%, maybe in the high 50s. So, and GDX is, interestingly, it's quite a bit stronger than GDXJ, and that's even the case with the advanced decline line, which remains really weak. And so what's been happening with GDX is the top 2 stocks in GDX, Newmont and Barrick, are both really strong. In addition to that, you have some of the other stocks are looking strong, like Franco. And the rest of the index, which has been very weak, those stocks are having a relief rally or an oversold bounce. So you combine that with the fact that the strong stocks are going up. That's why you're getting this very strong bounce in GDX relative to GDXJ. And there's quite a difference in both. I mean, if you look at the chart of GDX, this looks like it's probably going to test the October highs there, 2025, 2050 and that area. Whereas if you look at GDXJ, I mean, that has quite a bit of resistance around 28.5 to 29. You know, as we're speaking, it's trading at 28.09 right now. So again, there's resistance at 28.50 to 29, and its high isn't until 30. So GDX, I mean, if you're looking at a chart of only GDX, you're much more encouraged about the sector than if you're looking at a chart of GDXJ, where GDXJ, it still looks like an oversold bounce, whereas GDX, it looks like, you know, hey, we could be starting something here. It's pretty close to the October high. But again, my issue with GDX, Corey, is the advanced decline line is just so weak, and you don't see coming off a major bottom, you don't see an advanced decline line that is that weak. So what would need to happen is I think it would take, we can talk about December, the possibility of December being the last hike or not. But I think, how this weak advanced decline line resolves itself is you'd have to see the market continue to build a base. And, that was the bullish scenario that you asked me about last week, where I said, the market, the bullish outcome would be December would be the last hike, and the market would need to go sideways and base. And so that's how the advanced decline line could rectify itself, where you see for a few months, you see GDX bounce around, and you see the advanced decline line start to strengthen in that regard. I know that was a lot to take in, but yeah, I mean, we've seen a good bounce. I don't think it has that much more upside, so people shouldn't get that excited yet.
Okay, so Jordan, just a quick follow-up. How crucial is it, or is it even crucial, to see GDX, which you said is the stronger of the two between GDX and GDXJ, take out that October high?
I mean, even if it takes out the October high, which on a closing basis, that is barely above 2025, I want to say. You have the 200-day moving average at 2094. So even if GDX was able to go above that, it could still test the 200-day, which is a little bit higher. Again, 2094, it could test it and then make a bearish reversal at that point. So I wouldn't make too much out of that, honestly. It's still trading below quite a bit of resistance. It's still trading below, where it broke down from around 21. So to me, it would be more crucial to see the advanced decline line really pick up, because if you look at bottoms, like if you look at the early 2016 bottom and then the December 2016 bottom, the advanced decline line was strengthening around those bottoms. And then after those bottoms, it really shot up. So to me, that's what, more so than where's GDX going, I would want to see the weak stocks in GDX. I would want to see them rising. And so that's what I would look for, like a real surge higher in the advanced decline line, because when you get a significant bottom, that's really what happens. And obviously we haven't had that since the September low. So I know that was a long answer, but I'm more concerned with breadth at this point than absolute levels for GDX and GDXJ.
Okay, and the best thing for breadth is to continue to move sideways or start to see a more broad-based recovery, which, hey, we just need more money coming into the sector for something like that. I also want your comment, Jordan, on how much this rally, at least recently, has been extended due to the fact that U.S. markets, even in this shortened and slow trading week, have remained relatively weak.
Quite a bit. And the reason for that is because a stronger U.S. stock market now is going to increase Fed rate hike expectations, whereas a weaker U.S. stock market will decrease Fed rate hike expectations. So we're seeing a bit of a negative correlation, at least in a short-term sense, a negative correlation with respect to stocks and gold is starting to outperform stocks right now, and that's what we need to see. And if you look at what's happened with the stock market, it had this relief rally into November where the S&P 500 got up to 2820 from a low of almost 2600, and it's come right back down in the last couple of weeks. And so that is helping sustain this rebound in precious metals. Looking at the chart of the S&P, I mean, it looks pretty ugly. It looks to me like it's probably we're gonna see lower prices before we get some kind of a sustained rebound. And so that's my another issue with precious metals potentially is, the stock market's been declining for a few months here. So it's looking at some oversold indicators. I mean, there's still more selling to come before it gets really oversold. But my issue would be if the stock market finds a bottom sometime over the weeks ahead or in December, and it makes some kind of a bottom and it sets up for a sustained rebound, that would probably pressure precious metals. Because if we get a sustained rebound in the equity market, then Fed rate hike expectations would probably increase a little bit. And again, that would be negative for precious metals. So, the negative correlation between the two, I think it's well in place here and now.
And there just has been so many people jumping on that ship of thinking that the Fed is going to reverse course immediately when, quite frankly, they still haven't really told us anything definitive in that fact. And that's why we're all going to be watching that December rate hike when still the market is pricing in, and I think it fully expecting a rate hike. How important, or do you think it'd be important to the precious metals if the Fed does go through with a rate hike and they don't really change any of their words? They say they understand that markets have been weak, but they're not too concerned about that. Their dot plot stays the same, and they, for the most part, stay on course, even though the market might not fully price it in. But you know what? It never fully prices it in at the tail end of the year for another couple rate hikes next year. What kind of impact would that have on the precious metals, if any?
That would probably have a negative impact unless the market priced that in leading up to the rate hike. As I said, I mean, we're probably about 60% chance of a rate hike now, and it's probably not going to be 60% the day before that meeting in December. So but again, it's possible that that could all get priced in before that rate hike. Now, if it doesn't get priced in and then they hike, then you would get obviously a negative reaction in precious metals after the hike. Because the market right now, I mean, oddly enough, it's not pricing in like an 80 or 90% chance of the hike. It's coming into this week, it was 65%. I haven't checked today, but it's probably, it's probably 60% at best now. So there's room for precious metals to sell off if the Fed goes through with the December hike, which I think is more likely than not to happen. And, in the big picture, Corey, we've been saying the last rate hike, that's when precious metals will bottom. I mean, looking at my data, they could bottom a few months after that, or they could bottom a few weeks to a month after that. There's no hard and fast rule about that. And honestly, if December if that's going to be the last rate hike for the Fed, then we're probably going to see precious metals grind out a bottom over the next couple months. However, if it's not the last rate hike, then you're going to see precious metals probably have a big sell-off at some point and break those recent lows. So, that's just how I can put it simply enough, is if they're one and done from this point, precious metals are probably going to grind out a bottom. If there's more rate hikes to come, then we're going to see lower prices in precious metals.
Yeah, and one thing that I caution everybody is jumping too much on that thought that the Fed is going to switch course right away. They, and Powell more importantly, has said he's okay with some market weakness. There's still a fair bit of time before that Fed meeting, but starting to maybe put too much money in the thought that they are going to switch course, I think is a dangerous game. Let's wait and see what happens up until that rate hike and see some of the movements before that rate hike, and then more importantly, what they actually say, and just listen to what Powell has to say rather than gumming in with any preconceived notions. But either way, the point is the GDX has been bouncing and extending a little bit further than you and I both thought, but it still has not necessarily broken out to the upside. A nice relief rally and weathering some of that tax loss selling pressure, but we are still in the middle of that season. Jordan, great chatting with you. Thanks again for your time today.